Hi everyone. Piyush will present his Oracle discoveries and propose a design for a multi-chain Oracle.
Okay, so right now we'll just go through a few popular protocols and look at how they've implemented their oracles and see if we can take an inspiration from them. The
Could you
first one we'll
could you please
Mhm.
recap like all these protocols and how they work?
On all of them.
Very basic TLDR. Yeah, from a previous call, maybe like 2 minutes.
Sure. So let's start with Alchemix. Alchemix is a stablecoin minting protocol, but unfortunately it does not use any oracles. They allow minting of ALUSD only using DAI as a collateral on a 1:1 basis that is fixed and not variable. Basis Cash Basis Cash protocol uses Uniswap time weighted average price oracle once every 24 hours for the Basis Cash DAI pair, and then users can purchase bonds using Basis Cash when it trades below 1 DAI. The Uniswap time weighted average price protocol requires the active maintenance to take snapshots, which Basis Cash document says that the protocol does once every 24 hours.
Yeah, for basis cache it's acceptable because the kind of stabilization mechanism essentially works once for not mechanism itself but like trigger of issuance or like kind of printing money or issuance bonds happens just once per 24 hours. So just
Mhm.
for history. Mm-hmm.
Fee protocol uses multiple oracles. It primarily uses Chainlink oracles for the fee ETH and ETH USD pair, using which you can get the fee USD price. They also implement a generic wrapper so that any arbitrary oracle can be added into the same interface. And for ETH USDC, they use a Uniswap time weighted average price protocol.
Mm-hmm.
Oracle, sorry.
Immediate question, like implements a generic wrapper, does it mean you can add it any other Chainlink data provider or not Chainlink data provider, like a Chainlink competitors?
Basically, it's a wrapper over any arbitrary protocol so that their internal contracts can just use the interface provided by the wrapper, and the specific oracle that you're looking to use will be wrapped over by this wrapper.
Okay. Mm-hmm.
It could be a Chainlink, it could be a Chainlink competitor, it could be a Uniswap, TWAP, or it could be any other maker oracle, basically any other oracle.
Great.
About Frax, I'll go into Frax in more detail at the end.
Mm-hmm.
So let me just skip that. Liquidity. Liquidity accepts only ETH as collateral, so they just need the ETH USD price feed, which they use Chainlink. They also have a fallback mechanism in under the following conditions, which is that if the Chainlink price feed has not been updated for more than 4 hours, or if the call actually reverts or returns an invalid time or price, or if the price change between two consecutive Chainlink price updates is more than 50%. Under these conditions, they use a another third party solution called Teller, which also provides Teller as a protocol allows you to create oracles for any question and answer. They have their own staking mechanism wherein people who stake their native token can provide answers, and if the answers are found to be incorrect, their stake gets slashed. So they maintain a Teller oracle for the each USD price feed for fallback.
Mm-hmm. And can you explain maybe like in very short, like TLDR for our like DAO community, why is it important to have a fallback at all?
It is important to have a fallback because, for example, let's say we are using Chainlink. Chainlink is also an off-chain process wherein you're delegating your trust to a third party. Even though it's trusted by a lot, it's still an off-chain third party, which can either be manipulated given that the incentives are huge, or could be forced into coercion unwillingly, which means that it is not 100% fail-safe mechanism, and you don't want your protocol to suffer in case of such an event. So you have to think of possible edge cases and have a alternate mechanism to get price. Or in fact, if you don't even want to put a backup, it is just as important to detect these edge cases and pause the protocol in such scenarios. So even if Liquidity had said that we won't use Stellar, but if one of these three conditions ever holds true, we'll just pause our protocol. Even that is an accepted trade-off.
Basically, safety precautions against the attack or some I don't know, like when Oracle is failed for whatever reason.
Exactly. Yes. MIM, we'll go into a little more depth at the end, so I'll skip it for now. My uses Chainlink oracles exclusively, nothing interesting going on there. Olympus, we have not covered, so I will have to skip that. OUSD uses Chainlink oracles for data of DAI USD, USDC USD, and USDT USD pairs. And they also have their own OUSD ETH, I think, Chainlink Oracle, which is sponsored by Beefy Finance. They could have assumed that since all three of these are stable coins, they're pegged to $1, just like we saw with Alchemix, and they don't use any oracles at all. But they have shredded the assumption that these stable coins will always keep their peg, and that is why they use oracles even for these stable coins.
So can you give a TLDR for like simple reasoning? Why would you need to, like, again, you just mentioned what they likely use the assumption was they all like $1. Like, isn't it like redundant? Isn't it DAI good enough?
So again, you're placing your trust that in a third party, which is DAI here, that DAI would not lose its peg. So as long as DAI does not lose its peg, your assumption is valid, and in turn, OUSD price also remains at $1. But if in a scenario wherein something were to happen with the DAI protocol and its peg was lost, you don't want your coin to be affected as well.
And you also mentioned...
Because OUSD is a stable coin pegged to the US dollar and not pegged to DAI.
Fair enough. And you mentioned what a Beefy Finance pays for Oracle. Do you know how much do they pay?
I think it costs millions of dollars, but I don't have millions of dollars a year, but I don't have a...
Yeah, it depends how often that does it update. I think if it's about 200 times, like there are like if you see data providers, there are different strategies, and it depends not only by the time but also how volatile asset. So Abracadabra, for example, has spell token like updates very often when there is a huge volatility, and we less often when there is a low volatility. So it becomes more expensive when there is a volatility in the market, which is interesting. Okay.
It may also depend on the choice of chain. So for example, oracles maintained on Ethereum chain might be costlier than, let's say, Polygon.
Oh yeah, this is cost.
So unit.xyz. I will also cover unit XYZ in the next step, so skipping this for now. So now I'll cover Frax, MIM, and unit in depth. We'll primarily focus on how complex their mechanism is, on what chains they've deployed, and how much maintenance is required actively. So Frax uses Chainlink for majority of the assets that it supports, and for the rest of the tokens, they use a Uniswap TOP with a 1 hour average price, which they periodically update themselves. This information that they use Uniswap TOPs with periodic updates is according to what's written in the code and what's written in the docs. However, actually checking these contracts on chain shows us that they were last updated about 400 days ago, which means that they are now using Chainlink for 100% of their supported assets. Chainlink now also have a price oracle for FXS USD, which is Frax shares in USD prices. I still have no idea about which oracle they use for the Frax price, Frax USD price. So Frax as a protocol is available on almost every major chain, but minting and burning of Frax happens only on Ethereum, which means that they need oracles only on the Ethereum chain. So based on the information available in the code and the documentation, maintenance cost is very high because they need to invoke a transaction periodically every 1 hour to update their co-ops.
Well, they don't do it, as you mentioned, more than a year already.
Yes. Practical Etherscan data shows that these contracts were last updated more than 400 days ago.
And what about Chainlink? So how much does it cost to update the governance token data provider?
For Chainlink, there can be two scenarios, right? One, that the asset that you want is already listed on Chainlink oracles.
No. We speak about governance token, which is not listed. For example, like Frax, like listed the FSX share to USD. How much does it cost for them? You can check literally right now. You can go on a Chainlink because it's blocked on my site.
Would you know where?
FSX.
So it's updated once every 24 hours.
Or 2% of volatility. So you can actually check somewhere, I don't remember, like where you see data feeds. It actually shows for every like data feed, like how often, like kind of like a dashboard thing. No, it's a different one. Below you can see like a price history, and I don't remember. So somewhere there should be information, maybe above, like how often does it invoke.
Heartbeat is 24 hours, right? So it was last updated 25 minutes ago. So this is a countdown.
Oh, no. There is a deviation threshold. It's much more often because of this.
I see.
Now, could you scroll below a little bit, like one screen below? And volatility. Or maybe Oracle's data, I don't remember.
So yeah, volatility as we see is more than 2%.
Yeah. Well, I can probably send it as a chat, but point being, it might be quite costly, so it's very, very important to understand limitation of this. Okay, let's just move out from Frax. So basically, it's a Chainlink.
Sure.
Do they use a fallback?
No.
Okay.
The fallback was the Uniswap V2 LP, but that's not the case anymore, right?
Well, maybe it's not case because Chainlink just works very reliably. So it's okay. Is it correct to say that Frax use Chainlink and a fallback as a Uniswap LP?
Yes.
But
Uniswap.
the problem is you cannot use just Uniswap directly unless you update it periodically.
Exactly. Yes. Like we cannot trust the spot prices on any DEX for that matter.
Okay. Abracadabra.
Sure, MIM, Abracadabra, in fact. So this is an important link now. They support a wide variety of assets ranging from stable coins to yield earning assets on Yearn to, for example, X Sushi or basically all these assets. And they also have their own wrapper over all oracles, and each asset has a different oracle. I tried to go through a lot of them, and we can categorize them into certain categories. Firstly, they have a custom interface over all underlying oracles so that their protocol uses the same interface across all. For a large majority, they use Chainlink as it is. For others, they use two Chainlink oracles. For example, if we want the price of asset A in USD, but Chainlink has A/B. B is generally ETH or wrapped ETH, and it has ETH and USD. So they use these two oracles to compute the price of asset A in USD.
So what you're saying is they have a sort of a facade with a standard interface of 4 functions. Like, could you explain what was 4 functions doing? Why is it 4 instead of 1?
Where did I say they have 4 functions?
Well, I also read this code, so it's kind of the use interface of 4 functions. Or, okay, explain how you think it works. Like, I Oracle.
For example, okay, not this. Let's just find an oracle.
No, this aggregator, yeah, the topology of a code is not really good in that sense, but maybe another protocol.
Okay, so for example, this oracle gives you the price of AVAX in MIM, but there's no direct Chainlink oracle for AVAX/MIM. What they have is MIM USD and AVAX USD. So what they do is that they divide MIM USD by AVAX USD to generate MIM/AVAX price. So this is an oracle for getting the price of one MIM in AVAX using Chainlink.
I'm just opening the Oracle contracts and like my local machine. Like my question was about iOracle interface. I cannot open it from this Sublime thing. It's very annoying. But okay, yeah, please like present, and I will just go over questions later.
You're asking about iOracle
Yeah.
interface?
Yeah, so why is it like 4 or 5 functions? Sorry, yeah, no, like it's not really important like a name a symbol, but like pick spot, pick and get. So why is it like 3 of them instead of 1? Because it sounds like logical. You just ask what is the immediate price of this asset.
Yes, makes sense. Good question. Let me just go through the doc strings here.
So you didn't check, because like let's just try this video relatively like as update what have been done like for a community, and after that I will go over like technical questions for like specification application. Okay.
So for assets, like this was the second step wherein they use a combination of multiple Chainlink oracles. For assets listed on Uniswap, having majority of their pools on Uniswap v3, Uniswap v3 also has built-in oracles. So
Spot
for example,
oracles.
AGLD is a token. Yes. So they wrap over the oracles provided by Uniswap v3 and use that for such assets. Now, for example, something that is an open question for me as well is an asset such as XSushi. If we look at the XSushi oracle, Chainlink already has an oracle for sushi, and the sushi bar contract, wherein people can stake sushi and mint X sushi, gives you the live price of X sushi denominated in sushi. So to get the USD price of X sushi, you could use the Chainlink Oracle for sushi slash USD and the spot prices in the X sushi contract, which is what it appears MIM does. But an open question for me is that this, according to me, could be vulnerable to attacks and how they thwart that off. So if you see this get function, they are literally calculating the price as the sushi oracle's latest answer divided by
basically
this
spot price, and spot price is manipulable. Well, maybe it just does not manipulate that much in this contract. So I didn't know it's implemented that way. I didn't check all these implementations, but I mean, it appears me.
In fact, the X sushi contract is not a AMM. So probably that is why X sushi contract mints X sushi only when you deposit sushi, which means that an attacker would have to deposit a lot of sushi and it would just mint at the current exchange rate, which doesn't really affect the price of X sushi, which kind of makes sense.
It's kind of economical attack, not like flash loan attack. Yeah, I think it's a reasonable assumption why it works, how it works. Okay.
The Abracadabra protocol is deployed again on a lot of chains. They have different assets on each chain.
But does Oracle is Oracle deployed on different chains? Because like in case of Frax, even though it exists in all these chains, those are just wrap tokens. The minting and burning happens only on Ethereum mainnet.
Here we have different assets available on each chain, and then we have the corresponding oracles. So just as an example, let's say we're using the AVAX network, Avalanche network, and I go to borrow. And the list of assets that will be shown here, we do have oracles for all those assets on the Avalanche network. So all these. A rather limited list if compared to Ethereum, but still a list nonetheless.
Okay.
So for example, just 4 assets on coming to unit.
By the way, it's a maintenance none. What about spell token? Spell is an unreliable part of Abracadabra, and it's definitely not 0.
So are we talking about the S spell oracle here?
I don't remember what is S spell, but not spell oracle, which is above this, like 10 contracts above.
So
because it used Chainlink, and to sponsor Chainlink on Avalanche, it cost
definitely
probably $1 million a year, like last time I checked. So it doesn't sound like a non.
This is based on the assumption that the oracle somehow exists, but you're definitely right. Maintaining an oracle yourself definitely costs a lot.
Okay, let's move to unit. Yeah, and for just give me a second, little remark for a community. We pick up like these 3 like contracts like Abracadabra, Unit, and Frax because it's technically very different stable coins in terms of implementation. So all others like mentioned above, including like DAI cannot be used because the Oracle are prohibitively expensive, but our usually some sort of resembles one of these 3. So it's like pick up for diversity reasons.
Yes. Coming to unit finance, they use a set of, in fact, I can also open this. This will be helpful. They have three types of contracts.
Mhm.
One of the more important ones, they use, at least they have the contracts for it, the Keeper network. The Keeper network is a sliding window oracle on Uniswap that it is similar to a time-weighted average protocol, but herein you don't have to do the maintenance yourselves. You incentivize keepers on the Keeper network to periodically call the function for you, and you pay them in terms of Keeper tokens.
Is it correct to say that Keeper is a competitor of a Chainlink?
Yes, that is correct to say. Keeper can do a wide variety of tasks. In fact, Chainlink also has a similar service now, Chainlink Keepers.
Version 2, by the way. They just, yeah, it's already presented. They wrote us about that.
The Keeper network came before Chainlink Keepers, but they both offer a similar service.
Can you explain, like in a nutshell, why does Chainlink has a Keeper if Chainlink has oracles?
Because Keeper can be used in a more generic scenario, not just price feeds.
Is there any reasoning to use Chainlink Keepers as a fallback solution for Chainlink oracles?
Chainlink Keepers is not a solution. You still need a data source. So as long as your backup data source is not Chainlink, let's say it is Uniswap time-weighted average price for whatever time period, then it is a solution. It is a viable solution for to use Chainlink Keepers as the backup, provided this is an option that needs to be verified that they are not, there is in a sufficient diversity in the nodes that are actually working to provide data to Chainlink price feeds and nodes that are working as Chainlink Keepers.
Okay. So
because
it's better
if one of them was to go down, then we can expect theoretically at least that both these services will go down.
So it's advisable as a fallback use not Chainlink Keeper for Chainlink, but rather the Keeper from Kranja.
Sure, as long as other parameters are same. For example, there's not much difference cost-wise, etc., availability-wise, then diversity is obviously preferred.
Also, I think it's very important to mention like what maintenance does not happens to be like continuous, so you can basically pay by usage, so you pay as you need it, based on my understanding. Is it correct to say?
So if you have a, for example, this as a backup, then we have to keep it under active maintenance, even though Chainlink is functioning perfectly. Chainlink price feeds are functioning perfectly right now, because if they were to suddenly go down, then we need to have historic data to compute the average pricing.
But isn't it possible just to pre-fill it with, I don't know, like a couple of $1,000 and invoke those data providers as needed, not keep the maintenance? Basically keep maintenance zero until it's really needed, and when needed, yeah, it's expensive, but who cares? You need it only in emergency cases.
Not out of the box, because I'm talking about the Uniswap TWAP here, because that fetches the current pricing from the Uniswap LP pair, which means that if you want historical data, then it has to be, you can obviously get it off chain by querying the historical blocks in the blockchain, but then this data won't be coming directly from the smart contracts. You would have to trust the keeper to fetch the data off chain and then input it in a historical manner so that you can use it.
But it's still better because you kind of have to compromise both Chainlink and a keeper to do that, to attack the protocol.
That is true. Correct.
Okay, so looks like you covered like all existing interesting protocols. And could you give give a couple of words about Kidonix?
Yes. So the other type of oracle that Unit uses is a Kidonix oracle, which is a modification of Uniswap TWAPs, but without the active maintenance cost. This means that you don't need to periodically store the cumulative price on Uniswap LP into your contract to be able to use it. This historical pricing can be supplied by the user when they're querying for a oracle, and the authenticity is ensured by using Merkle proofs, in a way that when the user supplies the historical data, the smart contract, with additional gas override, of course, verifies that the pricing data that the user has supplied is indeed valid, and then goes on to compute the average price over the specified time period. The only drawback, apart from high gas usage, is the fact that this only works for the last 256 blocks, which is approximately an hour on the Ethereum chain, but is smaller periods of time on other faster L2s. For
So
example, Polygon.
basically, if we do it on a Polygon, how long? What is the strategy? Like if it's kind of main oracle is down more than X amount of minutes, you have to pause the protocol. What is this X amount of minutes?
That depends on the frequency of update. For example, if our Polygon oracle updates every 10 minutes, let's say, on Polygon, then if it's been down, we can only take a time weighted average price on Polygon for roughly for the last 4 minutes, because that's how long it takes to mine 256 blocks. So, and 4 minutes is a lot shorter than the update period. So if, for example, we say that the Chainlink price feed has not been updated in 30 minutes, which is like, we should have gotten 3 updates, but we've gotten none. We can use the average price for the last 4 minutes.
So which makes little sense.
Sorry, why?
Well, if basically you expect the oracle should work, and like only after half an hour you understand what oracle likely doesn't work anymore, you can use Kidonics, but only for 4 minutes more. So basically it makes like close to no impact, no?
We use Kidonics with an average price from the last 4 minutes. We can use it as many times as we want.
I see what you say. So basically, okay. So as a recap, like there are different systems, right, with different like advantages and disadvantages, and based on kind of current DeFi state of art oracles, what is your proposal for a stable unit? How you would design this multi-chain oracle, and what features or what properties would it have in terms of like complexity, maintenance, and multi-chain flexibility?
I would prefer to use Chainlink oracles for any and all assets that can be used, either directly or by using 2 or more oracles in collaboration with each other. The conditions for fallback would be similar to what we saw here on
Liquidity.
Would be similar. Liquidity, yes. For example, this will obviously be configurable based on individual oracle, because each oracle on each network has a different time span of update. Just for an example, the BNB USD oracle on Binance Smart Chain updates every 10 seconds, courtesy to PancakeSwap. So as long as the oracle has not been updated in the last X amount of time, we can safely, we can either fall back or pause. If the call itself reverts, we have no other option than to pause. And if the price change is too drastic, then either something has actually happened in the market for such high volatility, or the oracle is malfunctioning, in which case it makes sense to either pause or use a backup. For a backup, I would prefer to use a Kidonics oracle, because it works for all tokens, including liquidity tokens, LP tokens, and it does not have any maintenance cost. Yes, it has high gas cost for the user who's making the transaction, but since it's only a backup, which will be used in case of rare scenarios, I feel it is a good trade-off to pay that cost.
Is it available on all chains, like a Polygon, Avalanche?
As a concept, yes, it is available, but we do have to individually verify whether the limitation of 256 blocks makes it unusable on some chains or not.
I see, but it still kind of prevents you from the flash loan manipulation, right? So it doesn't really matter
Yes,
how many blocks.
definitely.
Still not a spot price per se. Okay.
Yes, it is not the spot price at all.
And design-wise, like interface-wise,
Mm-hmm.
what you would pick up? Which oracles, like from cleanness of a code, looked the best one out of a project of a source code you check?
So we definitely need something like a common interface. For example, something that MIM has done for their oracles, so that even if we add new oracles in the future, or if, for example, Chainlink migrates to a V2 or something else, our protocol does not have to update all of its contracts. As to which particular design choice to make, that would still be an open question, but I think the interface provided by MIM can be a good starting point.
How long do you think it would take to basically implement all necessary features? To highlight them is to have main oracle for a wide variety of assets, have it on multiple chains, have fallback in case of emergency, and well, fallback is less important for a test period, but much more important is to have a governance token price like SUDAO slash Ethereum, for example, or like dollar, euro, doesn't matter. And the question which we haven't discussed yet is also different fiat currency data feeds, like not only dollar but the euro or like Swiss franc, etc.
So different fiat currencies, I think Chainlink does have price feeds for that. Since they also have price feeds for, so Euro USD. They even have price feeds for Euro pegged stable coins in there. And they have a lot of currencies. Coming to SUDAO token, assuming we are not having a Chainlink oracle, the only way to have a price oracle for SUDAO is a Kedonix oracle, which is not a fallback in this case, but is the primary oracle for SUDAO.
Is it correct to say it would be expensive to use at the beginning, but as soon as you get kind of usage up to scale, you can just move to the Chainlink and make it like a more fundamental or something like that, because it requires some
we can amortize the cost later on when there's sufficient traction, and basically it makes sense to use Chainlink if the cumulative extra gas cost based by all user interactions outweighs the cost of supporting a centralized oracle.
Okay, so what do you think next steps are to have a stable unit like Oracle model, which kind of fits all these requirements?
The first step is to build a common interface that we'll be using across all our contracts. The second is to build a Kedonix oracle or adapt existing Kedonix oracles to that interface so that it can be used for the SUDAO token. The third step would be to finalize which Chainlink price feeds we want to use and just build simpler contracts that use those Chainlink price feeds and expose them in the format required by our interface.
Is it necessary to finalize? Because like Abracadabra supports like on essentially like after deployment picking up, editing and removing different data feeds.
Yes.
So why do you think finalization is important?
Oh, basically, I meant to say that if we were launching, let's say, a V1,
Uh-huh.
then which assets we want to launch in V1,
Okay.
that list.